Look, good evening, everyone. I'm PTI. Look, again, we're having regular video chat. My name is Eric. If you don't know me, I'm one of the admin for our Facebook group. I'm myself a mortgage broker as well. Um, Today, we invited Peter to come to our regular chat, because I think this is quite important. Now, most of us know where we're going into rate reduction cycle. So there's lots of opportunities and lots of risks as well. So Peter, one of the best buyers agent and economist in the country. I want to invite Peter to come to our talk to share his wisdom with us. There are lots of changes, lots of uncertainty. Um, Look, let's get started. Welcome, Peter.
Thanks, Eric, and thanks everyone for joining. Yeah, we did one of these just a few weeks ago, and it was a really good chat and really well received. So, yeah, excellent to be back on with you. And it's yeah, thanks for everyone for joining instead of doing what you might be doing instead. So, thanks for coming along.
It's very great pleasure to have you on. Um, look, Peter, I want to start to ask you a question about this interesting thing, because that's the one of the most important thing on people's mind, regardless whether you are mortgage holder or whether you have large cash sitting in your bank account, because this have an impact on both sides. Um, so look, now we're talking about even the big banks. I think the rate card is a certainty, or kind of 95% for the next week. Look, regardless of whether coming or not, but the momentum is already there. We all have the ideas. Look, the rate cutting cycle, rate reduction cycle start this year. Do you have the same view or?
Well, yes. I mean, I don't know for 100% sure whether we'll get an interest rate cut in February. As you said, look, if you look at index swaps, it's probably your best indicator. I mean, the implied probability of a rate cut is about 84%. So,
Mm,
um, yeah, usually when markets are sort of pricing something that highly, it's more likely than not that the Reserve Bank is not going to put a cat among the pigeons. So most likely, we get an interest rate cut in February, but it will be followed up with a press conference that's quite hawkish. It says it will probably say, don't expect too much more. It will all be based on the data that comes in. If you look at what markets are pricing for this cycle, though, it's only about 100 basis points of easing over the next, uh, I guess, 12 to 15 months. So that means the interest rate probably going to about 3.5%. So if you think about what um, the neutral rate of interest was before the pandemic, it was much lower than that. Probably now it's about 3.5. So yes, it's great for people in the market or people wanting to borrow, that interest rates are most likely on their way back down. And in fact, as you mentioned, Macquarie, National Australia Bank, Westpac, they've all been cutting their fixed rate mortgages already. So that tells you what they think. Um, Gareth Aid from CBA expects interest rates to fall. Westpac are now expecting inflation to fall under target, so they're expecting interest rates to fall. Yes, that's all great, but on the other hand, I wouldn't expect interest rates to go back to where they were anytime soon, that ultra low level. So, yeah, you get a bit of a tailwind over the next, say, 15 months or so, but I wouldn't be sort of factoring in an expectation of paying a very low mortgage rate again anytime soon. So in plain English, if you're borrowing at, let's say, 6.5% um, today, maybe a year or 15 months from now, you might find an equivalent type of product to maybe 5.5%. But there's always uncertainty. Nobody knows the future. But yeah, I wouldn't expect to see interest rates falling much lower than that again, unless something completely out of the blue comes. So yeah, I guess the quantum and the timing is always uncertain. But yeah, markets are leaning towards February as the start of the easing cycle. and if not February, there's a 100% chance of a cut priced in by April, simply because the inflation figures are lower now. And if you think about looking forward, well, some of the drivers of inflation have been things like rents. Well, yes, rents are still going up, but they're not going up at anywhere near the same pace as they were from 2021 to 2023. And there's a whole stack of things like that. Construction costs are another one. You could go through the whole inflation basket. Yes, there is still some inflation around in things like insurance, but all those big inflationary pressures that we got as the economy reopened, well, they're kind of easing now. So that would basically give the Reserve Bank plenty of optionality to cut interest rates a few times over the next year or so. But yeah, I wouldn't expect anything too much from the